everybody, it's Kevin Wadsworth at NorthStarBadCharts.com, and I'm here today to talk to you about silver, or one element of the silver market, the silver miners, SIL, the SIL ETF. I'm going to take a look at the chart for you in a moment and tell you what I see, what I think is likely to happen. But before I do that, just a quick reminder that there are 2 days left of our Black Friday and Cyber Monday half price for life deal. So just another couple of days until the end of November. And if you happen to join in the next couple of days, then you get exactly what it says, half price for life. And the fee never rises during that time either. So as long as you stay with NorthStarBadCharts.com, your membership fee will never go up. Okay, and also one other thing for new members and for current members who might be watching this, or potential members, some pretty exciting news for the website as well. We are having a major redesign. I'm not going to talk too much about that because it's going to be publicized in much more detail in a few weeks' time, but there is a major change coming to NorthStarBadCharts.com that is going to make the website a whole lot slicker and a whole lot easier to navigate. I know some people have said that there's great content on there, but we're almost burying ourselves in the content. I think there's so much stuff on there. So we are having a huge reorganization and making it far more intuitive and straightforward to navigate the website. So that's to come. And also to come, as I said, I promised you the SIL chart, so I'm going to do that now. I'll just start sharing my computer screen, and I'll turn off my my video or my camera. Okay, so you're now looking at the chart for SIL. Now, if you're not too familiar with technical chart analysis, you might be looking at this kind of scratching your head, wondering what we can do with it. Well, this chart goes back over 10 years, and this is the price chart. This is the weekly chart. I can put it onto the monthly candle chart if you like. It helps with the big picture, I suppose, putting it on monthly view like that. And one thing that we can do, we can start to put some technical indicators on there. And I've just saved a little template here. The monthly NSBC template is the one that we use for our subscribers on the website quite a lot. And what it does is it automatically puts on the 12-month, the 36-month moving average. That's the red and the green lines. The Ichimoku cloud, that's this red and green cloud-shaped thing, which is a Japanese technical indicator, actually, and it indicates, or it shows, regions of support and resistance into the future. You can see this red zone here. As price tried to get through it, it failed to get through it, and it's building resistance in this red cloud zone here. When the cloud thins, it's quite a weak spot, and price can punch through it much more easily. And you can see that's exactly what happened in 2020 when the price punched through the Ichimoku cloud. There was far less resistance there. It came back down through, again, a sort of a weaker spot in the cloud. It targeted that zone. And now the cloud is turning thin and green again, a little bit like it did back here, sort of hints of green, and the cloud is thinning rather than being thick. Now, that's an indication of reduced overhead resistance into the future. So we've also got volume on the right-hand side, volume by price, and we've got volume by time along the bottom here. So this is trading volume. Now then, what else can we do with this chart? Well, we can put on some support and resistance lines, which show us where the key sort of, support and resistance is, unsurprisingly. So this line that I'm putting on at the moment is a very important key resistance line. There's a sort of a zone, you can see when I place the line, sort of a little bit of so open to a little bit of interpretation where you would put it, but I think somewhere between there and perhaps there would be a very good place to put it. And in fact, both of those lines are acting as resistance. You can see the main difference being where you start the line at the top left-hand corner there, but it gives a zone of resistance that the price punched through, and then it came back down through that support line, and it's now bounced off this one. So both of those lines are providing support and resistance. Another very important line on here I'm just going to put on for you, and I'll just draw this in here, is the sort of key resistance line. It kind of fits in here somewhere. Again, It's impossible to be absolutely accurate to the nearest cent, but that's approximately where it would go there. So this is your resistance line, and it is in fact the final breakout line. I'll just put that resistance line on there like that. And once we break out above that line, it's sort of the final breakout above horizontal resistance that then will take us back to the previous highs and quite possibly beyond. So that's the ultimate target up there on the top resistance line. Okay, and we sometimes refer to these lines as, I'll just label one of them as a wake-up line, because what is happening as the price pushes through this line is that the stock is kind of waking up from a deep slumber. We've been in a bear market for many years, and then a sideways sort of price action for many years, and then we're starting to see some hints of an improvement, if you like, or a shift towards a bull market. And why do I say that? Well, if you look on the left-hand side here, we've got a whole series of lower lows. This is what happens in a bear market, of course. You know, you keep making these lower lows here, and then what happens is you start to find a base, and then the lows, when they come along, are higher each time. So a series of higher lows. And if you step back and sort of squint at this, you can sort of imagine an arc or a cup pattern in here, or a curve. So we can use TradingView to visualize that for us. And I'll just put this arc in here for you, so that hopefully you'll be able to see what I mean. Let me just get all the adjustments done. Okay, so I think you're starting to get the idea there that what's happening is that we have these touch points on the edge of the arc. That one there is on the resistance line. So you've got a touch point there on the resistance line. And then a touch point on the arc just there. A whole series of touch points on the edge of the arc down here, which give multiple confirmations that something is relevant in terms of this curve. And then further on here, exactly where the price stopped in March 2020, where did it stop? Well, it stopped right on the arc edge. And then again in earlier on this year, where did price halt? It halted on the edge of the arc. So we've got some pretty strong support here now on the edge of this arc, and the next objective is to break through this upper wake-up line. So when we move above approximately $28.50, that's going to set up a move to the 3-year moving average. That's the next sort of significant resistance, which ties in with this volume node at $36, just over $36. So that'll give us a move from what did I say, 28.5 to 36. So sort of a $7 or $8 move, which is about 25% move up to that line there. And of course, if we can identify the silver miners within the SIL ETF, then which are outperforming, then we can take positions in the stocks that are forecast to outperform the ETF and perhaps see some gains of around about 50% or so. Of course, the ultimate target is the ARC target, which is in the top right-hand corner of the ARC, somewhere up here. But you have to be a little bit realistic and not be too greedy. There's some resistance in this sort of volume zone around about 45, 44, 43 dollars. So it would perhaps make some sense to set your target up in that zone there. And I'll just give you an idea how you can take a position on the breakout here, assuming the candle closes somewhere around about there on the breakout, and a stop loss somewhere just below the edge of the arc, and the target, not too greedy, somewhere up in this zone around here, perhaps around about $45. And that gives you a risk to reward ratio of 3 to 1. Not the best risk to reward ratio in the world, but as I say, you can find silver miners within the ETF that will offer maybe 6 or 10 to 1 risk to reward. means that you're risking $1,000 for a potential gain of $10,000, and that's how you protect your net asset value, or your NAV, is by making sure that you don't just buy $1,000 or $2,000 or $10,000 worth of whatever stock, but that you use the risk reward tool to inform your decisions. And when you get a swing low, there may be a swing low that forms in here somewhere around or just below or just above that second wake up line. So it may be possible to bring the stop loss up to just below that new swing low, and we could achieve a risk to reward ratio of at least 5 to 1 perhaps. So a little bit of patience required. Of course, you know, there are other ways of playing this. You can have a lot of faith in the edge of the arc and take your position when the arc edge is touched. Set the stop loss just a little bit low below the edge of the arc, so you take your position on maybe that candle close there, and that gives you a risk to reward ratio of 6 to 1. So again, various ways to use the sound risk and money management protocols, but that is all done for our members, of course, at the website with our trade tracker stocks, which are currently running at the moment. So that's what I'm seeing for SIL. I've given you the ARC target. I've told you what we need in order to activate the ARC target. And that is it for now. I think we've covered quite a lot of ground there looking at SIL. We do this for our members, of course, with the gold miners. We do it with stocks and shares, with the SPX, with NASDAQ, with currencies, with the uranium miners. We do it with cryptocurrencies and everything else in between. All sorts of sectors are covered: energy sectors, shipping. Nothing is too big or too small to be analysed in this way. So if you like what you've seen here, then have a little think about joining us for the journey at northstarbadcharts.com. That's it from me. Bye-bye for now.